Over this past year, we've been working to address what we saw as a hole in the community for an organization that was aimed at issues of note to the financial technology community. As we look at it, it occurs to us that there is a need for awareness. As John Hayes famously pointed out, the #1 pull down on the Georgia Department of Economic Development for industries in Georgia was entertainment. And there was not anything on there for financial technology. So there's an awareness issue that we need to address. There is a lack of investment capital in Georgia, and that is being addressed in a lot of different ways, but through an organization like ours, we think that there can be an impact. How are we going to address what we're out to do? We're going to do a series of things, including industry events like this one. We have had Jack Gwynn, the former president of the Federal Reserve here in Atlanta, speak. We have this. There are a number of other events that are being scheduled. Part of what you're going to participate in today is not just the content that we're seeing, but the opportunity to meet and greet folks in your industry. So the networking piece will be very, very strong. Education, both in terms of our own personal education, in terms of the education of our organizations, and in terms of linkage to institutions of higher education. These are all focuses that we hope to embrace. And there will be the opportunity for us to highlight our own individual companies through various venues. So what we would ask is, if you've been impressed with what you've seen today, if you've been impressed with what you're hearing today, if you've been impressed with the opportunity to shake hands with folks like those on the dais now and that have been here earlier today, if those things have been noteworthy for you, please find a way to participate. The easiest way to participate is to go to the website and get in touch with one of the steering committee members and get involved that way. We have a LinkedIn community that will provide you with access to what we're doing. I know that you got into this room by ways other than me having to tell you how to get involved. We'd love to have you get involved. Leading this final panel this afternoon is Mr. John Hayes, and I will leave it to him to do the introductions of his panel.
Dave, thank you very much. During the day, we've heard the word globalization over and over and over, and we have an opportunity for the next hour and 10 minutes now that Dave took our first 5 to explore what that really means. And we have an exceptional panel this afternoon to do that. Paul Todd from TSYS, John Ziegler from Elevon, and Manning Smith from Global Payments. And these 3 gentlemen are involved in helping their companies take their products and services globally every day. And they're on the firing line. In fact, trying to organize the panel and have a conversation with them was tough because they were global most of the time. This move toward globalization has occurred for a lot of different reasons, some of which we're going to discuss this afternoon. Americans created the global payment system nearly 60 years ago, more than 60 years ago now. And this slide that's up on it's in your handout material that's up on the screen right now, illustrates the amount of consumer credit that's outsourced to financial institutions, starting with the first bank credit card at Flatbush National Bank in 1947, and how that has helped move consumer credit away from being something that was given by individual businesses the local grocery store, Riches, or whomever running their own in-house credit systems, outsourcing it almost completely to the card system. Today, 98% of consumer credit in the U.S. is outsourced. So globalization has come about from two reasons. One, we started with the technology, we had the infrastructure before anyone else, and then secondly, we've saturated to a very large degree the U.S. market, at least for consumer credit. So the three gentlemen that are here with me today, I think, are in an excellent position to help shed some additional light on this and give us a much greater understanding of what both the opportunities and the challenges of globalization mean to their companies and to our region. And let me start with John and ask each one of them to introduce themselves, tell you a little bit about their company and what globalization means to their individual firm.
Sure, thanks, John. My name is John Ziegler. I work for Elevon, based here in Atlanta. I run what we call strategic planning and development for the company. I oversee all the product for us globally, and then I oversee our strategic development of the company on a global basis, with particular focus on expansion in Europe and increasingly now in Asia. Elevon, for those of you who are not familiar with it, until a few years ago was known as Nova Information Systems. We're founded in 1991 here in Atlanta. We are 100% owned by U.S. Bank, having been acquired in 2001 by the bank. Payments for U.S. Bank comprises about 30% of their revenue and a little north of that as far as pre-tax income. It's a very important part of their business, very stable part of their business, so they like the business. We're a global payment solutions company, and I'll briefly touch on how we think we're differentiated within the market. But we transact in over 30 countries for over 1.2 million merchants. If you take all the global processors out there, on the acquiring side, we are probably number 2 in terms of number of merchants served, not in terms of volume. Our primary presence is in North America, so U.S., Canada, Puerto Rico, and Mexico now, as well as Western and Central Europe. And then we continue to expand constantly on that basis. I think you'll see that we are highly acquisitive, and for us, all of our growth is really looking outside of the U.S. And I think we'll talk later on about the opportunity in the U.S., and I think that is significant, but it's different opportunity than we have historically seen. I spend most of my time outside the U.S. Because that's where we think that our biggest chance to replicate our model, to grow our scale, and to sort of do the blocking and tackling that we know how to do best, where that really presents itself as an opportunity. Quickly, how we're differentiated. One is we are purely focused on the acquiring piece, as opposed to a First Data or TSYS that do the issuing and acquiring processing. And we also run very much on a bank model. In the U.S., you probably would never have heard our name until just a couple years ago, because we always stand behind the bank brand. And that's how we built almost all of our business. The other piece for us is that we operate a single global platform. We technically have 2 instances of it, one that runs all of North America, one that runs all of Europe. For us, that brings us significant capabilities in terms of scale, the ability to drive scale and profitability, the ability to release products into multiple markets very quickly, deploy regulatory and compliance releases. And for us, we are seeing that as being an increasingly big, important piece to our marketability to our international clients, who, with the advent of SEPA and the advent of globalization, realize that they are going to need to start to be able to service their international merchant customers, as a bank client we're talking about, not just in Germany, but in Austria and in the UK and in Poland and everywhere else. In terms of our size right now, we right now are the vast majority of our revenue and our profitability is in the U.S. About probably 85% of our revenue is North America based, and we would anticipate that number is more towards 75% or 70% or less by 2015. That's our goal. And I think that's more than 2 minutes, but I think I'm done.
Hello, I'm Paul Todd, and I run our strategy and M&A area at Total Systems, or TSYS. A little bit about our company. Of course, Jim Blanchard told you a little bit about how we were founded back as a spin-out of CB&T and Synovus Financial Corp. But to give you just a little bit more color about our company, about $1.5 billion in revenue, net revenue, and our heritage business was the outsourced North American credit card processing, issuer processing business. If you look back 6 years ago, that business would be about 90% of our company. We've actually diversified our business away from that being just it's still the majority, but not the predominant majority of our business. Our merchant business now, which comprises really two businesses, our merchant processing business, which is a processing business that was formed through a joint venture that we did back with Visa in 1996 called Vital Processing, and then we, back in 2005, purchased the remaining 50% of that business. It's now called TSYS Acquiring Solutions, and it processes about one out of every 4 merchant transactions. So that comprises about a quarter of our business. And then our international business is about 20%. And this really got formed first, obviously, when we went to Mexico and Canada, but then we established a UK presence back about 5 or 6 years ago. And then in the last 7, 8 years, we've really diversified internationally. We're in 70 different countries now through some acquisitions, both doing acquire processing and issuer processing around the globe. And our goal from a international mix standpoint is 30 to 35% of our revenue we want the next 5 years to be from our international segment. And it's where we're spending the predominant amount of our time, both from a strategy standpoint and a business development standpoint, is growing around the globe. I'll give you some more color on that later, but that gives you a pretty good overview on TSYS.
Thank you.
Hi, I'm Manning Smith. I'm the Director of Corporate Development and Strategy for Global Payments. Global Payments is a publicly traded worldwide merchant acquirer focused on direct merchant acquiring, where the merchant is our end user. Last year we did about $1.6 billion in revenue, and we processed over 5 billion transactions for over 1 million merchants all around the world. We operate in 11 Asian countries and territories in Asia-Pac, in the UK, US, Canada, the Czech Republic, as well as Russia. Right now, I would say that 45% of our revenue growth comes from outside of the United States. Now, that is a little misleading because a lot of it is in Canada as well. So if you were to lump North America together, then 25% of our revenue growth comes from other international markets outside of North America. Our 5 to 10-year goal is to increase that number to be 50% of our revenue. And we plan on doing that through, one, the organic growth in the markets that we already operate in, as well as through continued acquisitions.
Good, thanks. We've touched on this a little bit. By the way, I do have to make the observation. I did not deliberately put John and Paul next to each other, but the fact that we have Synovus spinning off TSYS while U.S. Bank is acquiring Nova, Elavon, has always intrigued me. That's the great thing about banks in this country, that they have such a consistent strategy. We've talked about...
I think we like Synovus' strategy.
We've talked a little bit about, I mean, obviously dramatic growth you're looking at globally for all three companies. Is the U.S. market saturated, or are there still opportunities domestically? Paul?
Yeah, well, we're unlike John's business, we're on both sides of the transaction. So we're doing both issuer processing and acquirer processing. And I failed to mention before, we're actually in the acquiring business directly now with our First National Bank of Omaha joint venture. We own a 51% stake in that company. But, from an issuer processing standpoint, the North American issuing business is rather saturated. I mean, it is a slower growth business for us. It's just a slower growth industry in general. And so from an issuer perspective or an issuer processing perspective, we look to the international markets for our growth. I mean, that's where we're seeing the growth, and I think that's where First Data and the other companies that are in our business are seeing the growth as well, and our results and their results and others I think speak to that. On the acquire side, or the acquire processing side, even we think there is still good growth in the U.S. business. The same store sales numbers are coming back now to be a positive growth trend, and I know John and Manning can speak to that in more detail, but we certainly don't have a significant share of the acquiring business, so there's a share game there, but just the overall growth of the merchant business, we still see good characteristics there in the U.S.
John?
I mean, I think we think that there is very good growth in the U.S. I think I'm pretty certain it's not coming from the traditional areas that have driven our industry for the last 10, 15, 20 years. I think that you've got a couple of things that are going on. One is you've got the advent of mobile acceptance, so things like Verifone with their sleeve for iPhone. Everyone's going to be supporting Android as well. You're not opening up merchants that otherwise would never have taken a terminal and therefore never taken credit cards. You're not opening up a whole new market of very small volume merchants, but in the aggregate, that'll become a big opportunity. There's a lot of focus now on capturing more on the business payment side, on the payables and receivables side. A lot of companies now focusing on integrating into the ERP systems, and I think that there's a lot of opportunity for players like us as well in that area. So right now we may hit their point of sale, but we don't go into the business piece of the payments. We can expand there. ACH, checks are going away, but ACH is not. Everyone is trying to get away from the card schemes, and I think that term scheme is used on purpose. And merchants want it. A lot of us want it. Congress wants it. And I think that there's going to be a lot of growth with seeing enablement of ACH, enablement of alternative routing of payments coming out. And I think that that's an area of growth for us as well. And then also the other area of growth for U.S. is sort of the international aspect of U.S. Lots of big payments processors are based in the U.S. We may own a lot of customers in the U.S. that have global presence, and those merchants, those customers are increasingly wanting to be able to view their business globally as a whole, drill down by region, drill down by hotel or store, and I think that our opportunity is to, as all of us have more of a global platform capability, to be able to service the Walmarts, not just in the U.S., but everywhere, and so we can really kind of cross-pollinate into the other regions through our strength here in the States.
I think that the U.S. market is saturated. There are a great deal of acquirers, ISOs, VARs. There are a lot of people in the space, and so I think you're going to see a lot of mid-single-digit growth. Where I think you can capture more growth is by having a segment-focused vertical strategy where you can differentiate yourself to the customer. Some of the strategies that we look into are e-commerce is a big one. There can be significant growth in that. Education, healthcare, those are all areas that we think will continue to grow, and that's where you're going to have to try and capture any growth above and beyond what the market's growing at in general. An example that we have within our company now is we have a check-in gaming solution, it's not online gambling, it's really essentially allowing people to take cash advances at casinos and verifying checks, but it is a very segmented, focused part of the market, and it's growing quite well in the double digits right now. So we look for things like that to grow in the future.
As your companies are expanding globally and opening up new markets, do you encounter an anti-U.S. bias? Do you find it difficult to work in certain companies? John, would you take that first?
Yeah, I'll take this because I spend 2 or 3 weeks out of 4 outside the U.S. First of all, I think a lot of it has to do with sensitivity and how you are presenting yourself to folks in other countries. I don't see as much of an anti-U.S. bias as a pro-local bias. And I'm sure that there are a lot of American companies that'll come in with their cowboy hats and, they're 6-shooters, and there's going to be some immediate pushback. But From what we've seen, I think that folks in other, particularly across Europe, we're seeing it certainly in India, we see it in some other parts of Asia. They acknowledge that we have a lot of knowledge about what we do, about payments, about merchant processing. And I think as long as we show enough deference to them to appreciate that we don't know their market, we don't know the way things work with them, and we want to learn with them and understand how do we adapt our business methods to the realities of, the Finnish market. Things are different in each market. Then I think it's very receptive. But a lot of it has to do with not coming in with that, with any arrogance about this is the best way to do it in every case. It's more, here's what we know, here are our best practices. How does that fit with how business works in your world?
Yeah, that's been our experience as well. I mean, we've been actually pleasantly surprised when we've gone outside of the U.S. about how well we've been received. Certainly, as John said, the way we've approached those markets has been a very careful one. But we've gotten some of the responses of, well, we've been waiting on you to get here. We've wanted some competition. We've wanted some of the capabilities that y'all have in the U.S., some of your product capabilities that they've not had in country. Certainly there is an in-country preference in some cases, and certain markets are harder than others. But we've, I think, generally been pleasantly surprised in most cases. And in the cases where they've been tougher countries, we've entered with a partner. So that has made things obviously a lot easier than if we had taken a kind of a go-it-alone strategy. But it's been a net positive. Yeah.
Yeah, I'm going to have to agree with John and Paul here. Maybe it's just because we come with a big check to try and buy out part of the company. I don't know. But I think that helps.
Money helps.
Yeah. But it's not necessarily anti-American bias, but I do think you see a sense of strong country and regional pride. And, these businessmen and women have to, reflect on how their general public is going to accept a foreign company coming in and owning something like merchant acquiring or partnering with one of their large bank institutions. To that point, we have a history at Global Payments of going into new markets, as I think Paul mentioned, in partnerships, because we understand that what works in the U.S. is not necessarily going to work in Asia, and it's not going to be what works in Russia. So we try and team up with local management whenever possible so that we can combine our best practices with cultural customs and best practices within that country to be well received.
Let me ask you a two-part question about regulation. One, the payments industry has had a tremendous onslaught of federal regulation here in the last 2 or 3 years. Only the lawyers in the room are happy about that. Do you see that same regulatory pressure in other countries, is the first part of this. And then the second part, is there any part of this U.S. regulation that is hampering your ability to compete overseas? And Manny, do you want to take that first?
I think that there has been increased regulation, really around the world, in every country that we've operated in. Sometimes it makes it more difficult to operate in certain regions because, they're very sensitive about what's going to happen with their customers' data. And this is personal information, cardholder data. And for instance, in some regions, they don't want us to take that and ship it off to the United States, run it through our systems, and then out to Visa and MasterCard. They want to keep it all local and within country, and I understand that. Sometimes regulation helps. In Brazil, for instance, they came in and broke up the duopoly between Redicard and Cielo, which really were the only acquirers in that country. So now all three of us here at this table have access into Brazil, which is experiencing, POS volume growth of around 20%. The most recent, U.S. regulation for payment industry that I can think of is the Durbin Amendment, and for a merchant acquirer that can actually potentially be positive as you reduce interchange rates. If you were going to pass on a fee that otherwise would have been unpalatable, it kind of makes it a little easier to do so now that you're also reducing somebody's rate.
Yeah, we've seen the regulatory environment internationally mirror to a large degree in the U.S., certainly in the U.K., where the predominance of our international business is. It's been as stringent. on our processing side of our business, the regulation increased requirements has actually helped us to some degree because, our whole value proposition is if you outsource it to us, we take care of regulation and you don't have the regulatory impacts and you don't pay for it. And so, we spend a lot of time and a lot of money, but we do it once as opposed to, our individual customers needing to do that. So there's been actually some silver lining, I guess, in some of the regulatory environment here. We don't see really a huge impact going globally of that kind of regulation. We haven't seen really any barriers or increased barriers that are additive to what we've seen, here in the U.S. So I wouldn't say it's that big of an impact for us.
So my answer is probably a little bit different. I agree on, in international markets, particularly in Europe, you see things like SEPA. That is frankly helpful for guys like us because it forces the Europeanization, if you will, of acquiring, and so guys with large scale and multi-currency cross-border platforms can then play and have a greater value proposition for our bank partners. At the same time, the regulatory environment being more evolving, Visa, MasterCard, all of their mandates that come out with greater frequency, and now that they're public, that also increases our value proposition to say, look, you don't want to deal with this. Give it to us. We'll own it for you. This is not what you do you're a bank. This is not what you do. On the U.S. side, Durbin Amendment, there's questions. Could it be helpful for us? I would say that it is a slippery slope, and it is not something that we would welcome because it's only a matter of time before they just realize that they haven't defined it the right way, and suddenly they want to jump onto the acquiring side and not just the issuer side of things. From an international standpoint, there was another regulatory reform that went in, I think it's under the Bush administration, requiring essentially, and I'm not going to be very deep on this one, so forgive me, but essentially 1099s to all merchants that we serve, okay? And there is vast and massive impact on international customers for a U.S. acquirer in that we now need to have what's called a W-8 bin form filled out, which every merchant that we service outside the U.S., because we're a U.S.-owned company, has to affirm that they are not, in fact, a U.S. company. And anytime you need to go out and touch 500,000 merchants to say, please sign this thing, that essentially is stating something to the U.S. government, that is not received well. And I will say that it likely puts all of us in a less competitive position when we start looking at partnering with foreign banks. We certainly hope that by the time, we got 3 years for this thing to kick in, we certainly hope that by the time it really does, that we have some solution to it. But that's one area of regulation where I think the aim was right. Like much regulation recently with the U.S. government, the downstream impact on competitiveness and industry was just not understood, and we're hoping that we can overturn that. So,
let me do a follow-up question to the regulation. How different is the regulatory environment in each of these countries you're going into? Is there any consistency, or is each one totally unique? Paul, you want to take that?
Yeah,
first?
I mean, the European regulation is obviously one that looks similar to ours. Obviously, if as you move further east, things start changing dramatically. We operate in China through a partnership with China UnionPay, and their regulatory environment is obviously different. It's unique, I guess, would be the best way of saying it. And of course, Japan. We operate in Japan, and the environment there is unique in kind of a good sort of way. Everything is really is very minimalized from a standpoint. We had an interesting analysis done the other day of an acquisition that we had done that was 1,200 pages, and we had one that was done in Japan that was a bit smaller that was 3 pages. And, it was kind of the difference in not only the regulatory environment, but just the whole contract law environment that exists in 2 different countries. Brazil has its own dynamic, which is more like the more Latin American kind of countries as it relates to both the regulatory environment and just the business environment just in general. And we just have gotten started in our Brazil business here in the last year. So Yeah, it is. I mean, Europe looks a lot like what we do here, but just like in our cultures and everything else, as you start moving around the different regions of the globe, they start mirroring what the culture looks like in that. And we've had to adapt to that.
Johnny,
You know, I think so for Europe, we pretty much understand it pretty well. It is very stable. We know when things are coming. Your biggest risk on Europe is always kind of the tax issues are more your concern than regulatory. You know, the big thing for us is going to be emerging markets where it's very fluid what's going on. So take China as probably a good example. India is a great example. Brazil is going to be a good example. All these places where they're still kind of feeling their way. How nationalized do we want to be? How much do we want to control the payment? You know, they're seeing some examples where governments have really played a bigger role in it, and they feel like maybe that's a good thing. So for us, it's kind of shifting sand sometimes, and it's hard for us to de-risk, and we like to. And that's where the negotiation with our partner comes in. So.
Yeah, I'll just echo the points that these two made. I mean, every country, you know, with the exception of Europe, seems to have a different regulatory scheme, but not only that, but they have different tax schemes, which is very difficult. And every deal is different and every country is unique, and so we just always go out approaching acquisitions in that manner.
You've mentioned Europe, Asia, and Brazil. Are you in any other parts of South America and anything in Africa? John, you want to take that first?
We are, you know, so Mexico is not South America, but we are Mexico. And
I think
there are more similarities between Mexico and South American markets than there are the U.S. So we actually would probably put those together. We're not in Africa. We are looking at certain parts of Africa. You know, Nigeria is very interesting. It's growing a lot. But for right now, you know, our goal right now really is to get. It's kind of unofficially our partner is announced a joint venture that we are negotiating currently in India with State Bank of India. That's a market we're very focused on. You know, from a standpoint of our business, we look for very large markets where we can get scale very quickly. And so our focus is building on the scale we have in Europe and moving east with that with our established platform, our established operations. And then we would never just jump into a very small market standalone. We need to be able to support the infrastructure that we need to put in place and then build from there. So India would be a good example of a place where we'll sort of put that as our toehold. And then we could expand into Africa from there, I suspect.
You know, from our standpoint, as I mentioned earlier, we're in 70-plus countries, and a lot of those smaller countries, we're just in a licensing arrangement where we're just providing a licensing business model. So we do have a presence in Africa. We do have a presence in the Middle East. We really, if there's other than some of the countries in the Far East where we don't have any presence, we're in pretty much any country around the globe that has a decent card presence. And, you know, the way we've kind of looked at things is we've established several home markets, and so those are the bigger markets, the ones that you would think of, the ones in Europe, India, China, Japan, Brazil. And so we've established those as kind of what we call home markets, and that's where we're going to have a presence of both people and infrastructure, and then the other countries will satellite off of those home markets. So that's been our approach.
Would I be ruining a further question if I shot out from Africa and Latin America?
No, go ahead.
Because, you know, in Latin America, Brazil for us is clearly where you want to be. Africa is not very, I mean, there's certain markets, I think South Africa is a very fast and more developed market in the region. But for us, Asia Pac continues to be an area that we're very excited about. If you think about it, they have strong growing economies, the very large percentage of the world's population, and they still have a lot of cash-based economies as well. I think on average there's one card per person in the Asia Pac region. To give you some color, there's 4 per person in the US and 2 to 3 in the UK and Europe. So we think there's just significant growth in that region as a whole, even outside of the obvious choices of China and India. We've also focused a lot of growth internationally on Russia as well. You know, card utilization at the point of sale in Russia is less than 5%. So it is clearly a cash-dominated market, and a market that we think will grow through the secular trends shifting from cash to cards, but also just as the economy starts to rebound, and grow in Russia as well. I think that's one of the BRIC countries that people, as of recently, have not been talking about a lot, but we still feel that Russia and Eastern Europe, its surrounding countries, are very significant growth opportunities for us.
I want to make sure, you're doing just acquiring globally.
Correct.
Elavon is just acquiring globally. Is TSYS both acquiring and issuing globally, or is it?
Today, we are not doing any at-risk acquiring globally.
Okay.
I mean, on the international front, we are doing acquire processing outside of the U.S.,
Right.
but the only at-risk business we have is in the U.S.
That's actually a good segue to the next question. You mentioned a minute ago that when you have shown up in some countries, they've welcomed you and said, "I'm glad you're finally here." What is our competitive advantage? Is it our technology platforms? Is it the fact that we're huge? What is our competitive advantage globally? And Paul, would you take?
Yeah, I'll speak to that from our standpoint. It's both. It's both the product and the capabilities there, although, there's always that challenge of making sure that you're getting the local payment options to the kind of complexity and the ability that they had on their native system. But it's also scale, the cost advantage of the global kind of scale that a company like ours has. It's rare that a local competitor is going to have that kind of scale to be able to bring to force. So it is a cost scale kind of advantage, but it's as much product as anything, and the ability to take the advances that we've had here in the U.S. and all of the feature functionality that the U.S. issuers have kind of put into our system, speaking on the issuer processing business, and then take that into some of these markets and giving those issuers that competitive advantage in those local markets has proven to be a winning formula for us. So I'd say it's both. It's been our experience.
Manning, you want to take that?
Yeah, I think that being the first and being the largest are two very good things. We have an expertise that a lot of partners internationally look for, and quite frankly, we have the scale, being the largest, to compete at a level that a lot of companies, per Paul, are not able to compete at. Something else that I think kind of differentiates American companies from their international competitors, and it's not true for all, but for Global Payments at least it is, we are independent and we are not owned by a bank, or even as an international, the traditional model is the bank is also serves, they're the acquirer as well. So the acquiring group has to compete with the issuing group and other services that are more core to the bank for resources and capital, and we don't have to do that. Global Payments invests all its money in direct merchant acquiring, and we use that to generate the scale that we've discussed. We have spent a lot of time and effort in consolidating our worldwide front ends and back ends into one platform, and we're still working on that, but we think that will drive the scale that we need to be successful around the world.
I want to come back in a minute and follow up on that point, but let me give John a chance to answer the first question.
No, sure. Agree with everything they said. The one thing that I think we also collectively bring is just operational excellence. So we know how to do it better. We know how to do it cheaper. I'm sure you all have facilities in Europe that you operate out of. Not everybody's running out of the U.S. We're a U.S. company, but we've got a facility in Warsaw that we staff. We have 300 people. We staff 14 languages out of it. So for us to bring on a new market is very cheap, very easy, very quick, and it's something that they would have to build a whole new facility for to do that. To Manning's point of you're not owned by a bank. I can't say that obviously, but that actually has been that always could be a concern. All of our businesses through banks, and the reason that we get away with it is that U.S. Bank is only in the U.S. Were U.S. Bank to be a global player, we would probably undermine ourselves pretty considerably. As it turns out, U.S. Bank is so conservative and so stable. The last 2 years, we've seen our ownership by a bank, a U.S. bank, be actually a plus, because these banks say, oh, well, they understand us, but they're not competing with us, and they got a whole bunch of cash in the bank. So, it's worked out okay, but I can see how that would be a problem. If you're owned by Citi, that might be an issue, yeah.
The question I was going to ask Manning, and I think you're kind of on the other side of this, are you actually taking merchant risk as a direct merchant acquirer? Have you got the fraud and dispute risk on the merchants?
Correct.
Okay, but you do not.
No,
Elavon does not.
We take all of it. We own all of our contracts. So, and in fact, and Manning will say, I think, agree, the biggest challenge that we have in Europe and elsewhere is that Europe is where the U.S. was 15 years ago. Banks believe that the merchant contract is critical to their relationship with that merchant. And our sales pitch is, look, let us take the contract. We'll take the risk. Your relationship is still there. We'll answer the phone, for your case, HSBC, Merchant Services, or whatever you'll do. They won't know, but we're going to take the risk. We're going to take all that off your plate. European banks are still getting over being able to let go of that contract. And so that's why they're always driving for joint ventures and things like that. Now, our typical path, and you guys have done it as well, is you do a joint venture in Europe, let them get comfortable with the fact that they're not going to lose their merchant customer, and then you buy out the joint venture because they say, okay, you know what, just take it on. I just want a revenue stream. I don't want any costs. I don't want any risk.
That's absolutely right. Coming back to what Paul said a minute ago, talking about the technology superiority of the U.S. systems, are you seeing innovative companies, particularly small innovative companies overseas, that have something to teach us?
Yeah, we are. I mean, you always get into, the buy versus build argument around technology, and we have that debate constantly inside TSYS, and we probably still see the majority of the new kind of product things that we're interested in being developed here, frankly. We do see some interesting technology coming out of Europe. It's probably not as much relative to the size of those markets versus the size of the domestic market. It's not proportional at all as to what's coming out. And I think that's going to be, as these markets develop, the technological kind of infrastructure of development and entrepreneurship will probably trail the payments business some. So we see it, but not to the degree you might think that we would. Right. We still see, what we are seeing is a lot of the companies here developing product that are global in nature. So it's not just focused on the domestic market. It's making sure that what they're doing is kind of solving a global problem as opposed to just a domestic problem. I don't know if y'all have seen that.
John?
Well, I would say, frankly, most of the innovation, I think, is coming out of the U.S. The European context, just the requirements at the merchant point of sale, they're just not as complicated. It's not where we are in the U.S. So I think you see a lot more coming out of the U.S. Now, what I would say is I think Global could speak to sort of the Asian region, where you probably have a lot more innovation coming out, and we just don't see that as much. So.
Yeah, there is. And what we see, typically, maybe I'm not the best person within Global to answer the question, because I largely deal with large acquirers or large banks with whom we're trying to form a partnership with or acquire assets. But when we do look at smaller companies, what I've noticed is they're always providing a very focused niche for the acquiring business. They do it well, they know what they do, and they're experts in that small area. And I think that's what drives them being so successful.
Is that true of mobile? Do you see anything in the mobile space globally that we should adopt here?
For mobile, mobile's a hard one for me because it depends on what region you're looking at as to what kind of mobile technology is going to be utilized. I've seen where mobile is just considered a sticker on the back of a phone, whether it's a chip in the phone done through NFC, SMS, text. We don't really know which one's going to stick and be prominent, and I think that largely depends on which market you're operating in and to how you're going to have to invest in mobile to meet those needs of that market.
And we would agree with that. I mean, you look at what's being done in Japan with mobile. They're ahead, obviously, of what they've done both on the transit side as well as just what some of the phones. But it was an easier problem to solve there because they were further advanced with their phones than we were here. And as you move around, you see some of the stuff, some of the person-to-person stuff in Africa is neat. I mean, and to the degree, I think we may see some of that actually happen here before we see this widespread dominance of NFC kind of payments at the point of sale. I think some of this P2P, the ability to get that in and moving, well, we're already seeing it to a large degree, but I think that some of the technology there is great, and they've kind of leapfrogged. I mean, it's like the conversation earlier around EMV and chip. Does mobile kind of leapfrog some of the security stuff? And there's, I think, a reasonable scenario where that can happen. So the mobile's much like a lot of these other, whether it's regulation or other, it is geographic in nature, and the development is tied to that.
Yeah, I think the thing about mobile, and this is just my opinion, I'm not even speaking for Elevon, but first of all, I think it's like the cloud. We had to define it first, because I don't think a lot of people know what mobile is. Is it a sticker on the back of a phone? Is it in the phone? We kind of break up mobile into a couple pieces. One is using a phone as a method of payment. Another is using a phone as a method of receipt of payment. And for us, they're equally important in terms of our business model. If I look at using a phone as a method of payment, I mean, frankly, I'm really talking about contactless, right? I mean, mobile to us in that context, and to really dumb it down, I mean, mobile to me is essentially e-commerce without the cords. I mean, that's really what we're talking about there. And so, you see like this consortium now that's gotten together with AT&T and Verizon and T-Mobile to enable mobile payments. Well, the killer app for them is going to be the wallet, okay, and the loyalty and all that goes in there. After that, it's just getting contactless readers out, and then because it's easy to drop a payment, it's just a contactless payment that then hits a card, hits an ACH, whatever it does. So and then on the acceptance side, that's where I think it's really. I think mobile as a method of payment side opens up all sorts of point of sale alternative payments options and loyalty options that are very exciting and will clearly happen. And I think they're going to happen very fast now that you've got this. 90% of the U.S. handheld mobile market going to be covered by this consortium. And then on the modes of acceptance, I think that's extremely exciting because it opens up a whole slew of merchants that didn't accept before. And it also has massive implications for developing markets where you have small ticket items, small number of transactions per day. It does not make sense to give the guy a $600 GPRS terminal to transact 4 transactions a day of 200 rupees. But it does make sense to give him a $10 plug-in that runs off of his existing data plan, and now he can take cards, a couple times a day, a couple times a week. So.
Yeah, to John's point, especially in India, I think it's neat that, in some of the rural areas where they've not developed the infrastructure, they're not able to take a traditional POS swipe, but they all have mobile phones. So if you are able to accept mobile in that manner, I think a country like India could kind of skip over the POS, at least in the rural areas, and go straight to acceptance through mobile phones.
We looked at it, and just the other day I saw the demo, and this isn't anything new, but this whole Square, which I know y'all probably seen, and you whether it becomes the product, but the ease of use of being able to do this over the mobile phone has just gotten so. I mean, we were playing with it the other day, and there's going to be this whole segment of kind of these person-to-person payments, like you say, Manning, that the device is just not going to exist. There's no reason. It's so easy and so kind of fluid that globally, but here even in the U.S., I think there's going to be a decent amount of increased usage just because of the robustness of that kind of capability.
Paul, I'd like to follow up on a comment. You were talking about buy versus build. As the creator of technology companies, my recommendation is that you only buy and that you pay a lot of money for them.
But we have paid a lot of money for buying before.
And we appreciate that. So.
Yeah, that's
good. Let me open it up now to questions from the audience. There's a quick hand here.
I got a question on, you talked a little bit about both your focus and your experience and perhaps the challenges you have in China in particular. I do a lot of product development there and also sell quite a bit of product there, but we deliver things online, software as a service, and I was just, as a matter of fact, at a Microsoft, talking to some of their top executives over in Shanghai, and they're having the same issues with all this government control, but the And so there's so many rules that you have to get around, and even for Microsoft, it's a huge challenge. But the potential there is just unbelievable. So,
Did everybody hear that? That's a good loud voice. Everybody in the back hear that? Okay. Who wants to take
I'll
that?
speak to China first, and
Okay.
then we're in the Chinese market on the issuer processing side, and of course our partner there is China UnionPay, and the company we're partly owned is called Cup Data, and we have seen the difficulty of if you're not partnered in that country. A kind of a de novo or go it alone strategy with the regulations, not only the known regulations, but kind of the unknown regulations that necessarily aren't really written anywhere, can be such a formidable barrier that it's unclear to me how you can sometimes even make a successful run, irregardless of the opportunity, because the opportunity is clearly there. I mean, the numbers that are over there are staggering, and I think, as Manning said, the growth numbers there are just as powerful. We are not on the acquiring side, so I'll let John or Manning speak to that. Once again, I think if we were going to get into that side of the business, we would be in a partnership. There's such a dramatic piece of that market that's owned by the kind of the incumbent players. Kind of getting into that business is tough. I don't know what y'all's perspective is.
Yeah, if I may, it's it's absolutely very difficult. Through our partnership and joint venture with HSBC, we're technically in China, but we're only allowed to process international cards. We have spent a significant amount of time, and our team in Asia Pac has done a great job, but we are the first international acquirer who is able to process local currency, renminbi transactions in China, and even after all that time, it's really only in Beijing. To your point, we have to go from there, go through the exact same regulatory hurdles in all of the major areas. Hopefully, that Beijing's a big one. It should be a little easier, but I mean, it's certainly something that we think is worth the investment and the time.
John, comment?
Well, what he just said is the reason that we haven't entered China yet. I mean, there's a lot of legs on the market, and once it stabilizes and opens up, then we'll let them do the groundwork.
Good. More questions from the audience? Yes, sir.
I have a question. Have you, because of your global footprints, have you thought of either leveraging platforms or partnerships or creating new platforms to participate in foreign currency transfers of currencies across borders from one country to another?
I mean, we've looked at that business, and Manning, I know y'all were in that business. We have decided we're not in that business. We've looked at some companies that have been in that business. That's not to say that we won't get into it eventually, but strategically, we've stayed out of that business right now.
Yeah, we actually exited our Dolex business. And I think it's a good business to be into. I think that the faltering economy and housing market didn't help money transfer to Mexico. But nonetheless, I don't think it's something that actually is as core to acquiring as we thought it would be. We thought there'd be a lot of synergy capabilities there, but there really aren't.
Yeah, we don't really do it. Something that's coming out that I think is interesting that probably will, we can participate in, and I'm guessing all my colleagues here will as well, is, there are things coming out now with things like mobile top-up, and you activate it through the POS, which is less currency, transfers as sort of creating a credit card transaction and putting it to an account that happens to be like a mobile phone. There are some things like that and are activated from the POS standpoint. So for us, it's what we're already doing. You could see things like that, I think, happen, and increasingly in some of the developing markets. But it is a different business, and the exposures are totally different. The cycles are totally different, and so I'm not sure it plays into our strategy of trying to be, very stable and being able to manage our ups and downs.
Additional questions? Let me go ahead and do a quick summary. It's obvious that the focus of these three companies, and I think this is true of others in the processing space, the payment space, is to go international. The U.S. is saturated from the consumer credit side. There may be opportunities in B2B and some other areas, but clearly going global. And I guess my only comment on that is I'm awfully glad that we in Georgia are going to benefit from that as you guys continue to grow with this international business. We thank you.